I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner once again, Mr. Nick Hodge, who of course is also an investor, the publisher of Daily Profit Cycle, and an overall renaissance man, everybody. This is, let's see if I can get it right this week, the 322nd episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk markets. We're going to talk what we're investing in. We're going to talk about a number of things, including, I guess, me, Candace Owens, Tucker Carlson, Marjorie Taylor Greene, and, you know, a couple of others now on the same side of the war discussion. So didn't have that one on my bingo card. I'm non-biased. I like to vote on ideas and thoughts, not on people. And so I'll take it where I can get it. Anyhow, first and foremost, Mr. Hodge, how are you today? Lots going on.
Happy summer to you, Gerardo. I am doing great. Wife loves me, to steal your line. And kids are home from school doing the bull things. And so happy summer kickoff. How are you?
Look, same, and that never gets old, right? I mean, my wife and I just, had the good fortune of celebrating, and I can't believe it's been 23 years, right, since we met, and so it's gone by so quick. I always say it's a heck of a good start, but, the fact that you can grow closer and experience new things and still be eager and excited to be around each other every day is indeed a beautiful thing. So I hope everybody had, a great Father's Day this past weekend. And I hope everybody had, for those of you celebrating anniversaries or just some love. We can use some more love in this world, everybody. That's a fact.
Yeah, well, happy anniversary. It doesn't
Thank
sound
you.
like it was a wedding anniversary, just an anniversary of you meeting, but nonetheless, what you say is true. It's a quarter century. If you want to put a sort of time stamp on it, that's a long time to be together. So I'm glad you guys are still feeding the fire, as it were.
It's a beautiful thing. I'm 46 and we've been together 23 years. So you can do the math on that, right? 50% of my life has been around her and most of my adult life. So anyhow, look, I don't know that I fully qualify as an adult, but let's talk some adult things. I want to start with the markets this week, because if we get into Iran, which we talked about last week, and the potential for a war, and the energy was kind of foreshadowing some instability in the administration, and we'll talk about instability in the administration, then we're going to start with another 15 minutes. And I don't want to start that every week with the social commentary, though it ties in to what's going on in the markets. We typically start with gold, silver, copper, and uranium. I actually want to start with a metal that we touched on briefly last week that I said to keep an eye for. Platinum continues to run, right? And I want to get your thoughts on the platinum chart. It's up another $57 today. That's almost 5%. It's up some 30% here over the last month or month and a half, and almost no one is paying attention. And I get why very few people are paying attention, because it's not as sexy as gold. It's not as sexy as silver when silver decides to break out like we said it would. Now very firmly above, the 36, 37 level. And it doesn't have the story that copper and uranium has, but platinum is looking incredibly solid. I was looking at some technicals earlier, and it's on the verge of really, really breaking out. I'd love your opinion, because you're the chartist and technician amongst us. And then we could discuss the who cares why it's breaking out. Just position yourself to make some money off of it, right? Which is what we're here to do.
Yeah, I haven't shared a chart in a bit. Let me see if I can get that done today. And I will try to talk about platinum for you.
I appreciate you, sir.
There it is. It's up on the chart there. Those are monthly candles. So what you're noticing here is that the headlines will say platinum has touched 4-year highs, and that's true. You can see trading at 1321 there. 4 years ago would have been 2021 in January, when it was around the same level. And so that's why you're getting the 4-year high in uranium headlines. What's interesting is that as you zoom in on these monthly candles, if we were to end up where we are now, I'll keep zooming in for you. Actually, let me just do a 5-year. You'll see that even though it's at 4-year highs, this monthly close over here, this red candle, wasn't a close. The close was sort of down here, right? At 12.99, where the candle gets wider. This is just the wick of the candle. So yes, we're touching 4-year high prices, but what would be more interesting to me is if we were to close the month above that $1,300 level. That will be your highest monthly close in over 4 years. And that would be hugely bullish for the PGM complex, specifically palladium. I'm going to pull it all the way back out here and show you that And sort of after that, if you do get a breakout from that $1,300 level, then as we say, there's not much in the way of it from running even higher to what was all-time highs on the
Yeah.
heels of, well, not on the heels of, I guess, heading into that
Yeah.
2008 recession, a global financial crisis, when the price of platinum was over $2,000 an ounce. So that's sort of the technical setup. There's obviously some what I would call congestion or traffic in here at the $1,500 mark that it would have to do battle with before getting to new all-time highs. But certainly interesting. I mean, that move that you see here in June for the past 2 or 3 weeks, I mean, we haven't had a move like that in half a decade. So something to pay attention to and call out for sure, as you just did, and maybe we can discuss why it's doing that, and I'd love to hear your
Sure.
thoughts.
No, look, it's funny. I wrote a piece for Daily Profit Cycle, which you all could get for free. You could get Nick's thoughts for free and a host of free things from the group of talented editors that work with us. And you can do that by going to dailyprofitcycle.com/subscribe, right? But I wrote a piece, I think actually today, if I'm not mistaken, I wrote it this morning. It's been a long week, despite it being a short week, right? Happy Juneteenth, by the way, everybody, by the time that y'all get this on the other side of the premium version. But I wrote that at the end of the day, the why doesn't matter. So we know that the demand primarily comes from catalytic converters, right? And the rise of hybrid vehicles and the popularity of them, which use a lot of platinum, has really made a lot of has created a lot of demand. And the secondary reason that a lot of people are citing is the fact that gold is at, damn near all-time record highs, and the price of jewelry, right? It is becoming a little bit unreasonable for a lot of people that want to purchase a quality piece, a piece that actually has some nice weight to it. And so a lot of jewelers now are substituting their gold offerings with platinum offerings. My point is, at the end of the day, we'll figure out eventually where the demand came from. Usually that's, a lagging indicator. We'll find out the next month or two where demand started really perking up. But who cares? The premium portion of this podcast is going to get, I think probably our main, at least mine and my end of it, PGM pick with the new copper discovery to go with it that could also be game changing. And that to me gives me the best kind of exposure to the PGMs, potentially to a massive copper deposit on private land with the government's blessing, expediting its way through permitting. It doesn't get much better than that. And by the way, this company's super cashed up, and the CEO owns over 50% of it. So I say all that to say that if I could just pick a trend, see the trend, wait for the breakout to be confirmed, and just maintain that position or increase it, it's not very difficult, folks. I say this all the time. I pride myself as a simple guy with simple ideas. Sometimes it's easy just kind of following the trends and following the companies. And yes, we do this every day, all evening, sometimes all night. So yes, we're more tied in than the average person that works a 9 to 5 or has a career, works 12 hours. But this one isn't that difficult to make money on. And if this trend continues, I think, people that we've already gotten into this position are going to continue to do well. And people that aren't, it's a pretty damn good entry point, despite the stock being up some 40% over the last couple of months, right?
Yeah, I know precisely what stock you're talking about, and I would echo the two things that you said in terms of why platinum's been going up. The Chinese jewelry demand is switching out. Goldman Sachs, I believe, was saying it was pure speculation, a la catch-up trade. That what you were saying. Gold has already moved. Silver has moved, but not as much. And people are just out there looking for other hard asset trades that haven't moved as much. And platinum fits the bill. And I would sort of direct you to last week's episode where I was telling you that you might not necessarily need a narrative or a reason for it to go up. Just the mere fact that inflation is swirling from soft to hards, which I was telling you is going to continue, and which Mr. Powell said was going to continue as well today, expecting more inflation for the rest of the year on the back of the Fed meeting and presser that the Fed had, which was a snooze fest, as sort of everyone knew. That they weren't going to raise rates. But he said what I was telling you last week, that the inflation is going to tick back higher. And I was telling you that it's going to be on the back of harder things versus softer things that
Yep.
had come down in price. And this is just another one of those harder things. Gold has gone up, silver's gone up. Oil, we were talking about last week, has gone up for the $20 in short order. And here's another harder commodity that is ticking higher. So pick your reason, or don't, doesn't really matter, but definitely pick the way you want to play it, which is what you were talking about. And that's through, in our case, junior equities that have exposure to the metal.
Yeah. No, look, I think that's perfectly said. We'll talk more about that in the premium portion of the podcast. Palladium starting to run with it. And again, so if you get a PGM deposit, you're going to get a little bit of both. So I don't want to rehash the same points that we just outlined there. I do want to talk uranium, and then I promise we'll talk gold and silver, folks. I know a lot of you tune in because you're heavily levered to gold and silver. So we'll talk about that. But uranium had what is going to be a major catalyst. And that major catalyst is going to start happening here this Friday and early next week. So Sprott is the Sprott Uranium Fund, which raises capital and then goes out and buys physical pounds and takes them off the market, right? And it announced last week, or early this week, like I said, it's been a week, that it was raising $100 million. And like a few hours later, the demand was so high that it said, no, we're raising $200 million. And so Friday will be the first day that the fund will be able to start deploying capital. And we've already seen an increase in the spot price, which again, for those of you that, don't know the nuances of the uranium market, most people pay attention to the spot price. It's the utility price. It's the contract, long-term contract price. It's really more consequential, but both have started ticking higher. And again, the reasoning doesn't matter why. We know the supply demand fundamentals. We know uranium's going higher. We don't know exactly when. We don't know how high. We all have our theories. We all have our guesses. We all pull out the crystal ball every now and then. But believe you're behind off on position to make money off of it, like regardless of when it happens, right? And that's what I'm trying to preach this week. But the reason why doesn't really matter. It's a clear indicator that yes, the price is moving higher if you have 200 millions going at the spot market, taking pounds directly off what's already a tightening market. So, on top of that, we just got news that the Department of Energy is launching a new pilot program, unlocking private funding and fast tracking commercial licensing of advanced reactors towards 3, achieving criticality by July of 2026 is the headline. And so, again, all this is new demand that hasn't been baked in to the supply demand fundamental picture. So this is going to continue to happen despite less supply coming online. It's the perfect storm. We've made money on 2 legs in the last decade, and very good money, by the way, in the uranium trade, right? We front ran in 2016. It cooled off, I believe, and whenever the heck it cooled off, 2021, 2022. We positioned again. And it ran for like a year and a half. We made damn good money on that second leg. And then it consolidated all the way back with a lot of the equities touching 52-week lows just 6 months ago. Some of them just 3 months ago. And now, 30, 40, 50% later on a lot of the bigger names, the names that are positioned to produce, they're starting to run and they're starting to front run that next leg higher, which I think is going to be the most volatile / profitable one for us. The beauty of the move is the explorers haven't really moved a ton. Like they haven't moved a lot, right? And so you can still pick up quality teams that are putting quality assets together for $7 million, $10 million, $15 million market caps. These are teams that in the bull market that I believe we're in and headed towards would command a $50 to $75 million market cap valuation just off the fact that these are the people going to look for you. Right. And I think we're entering that part of the cycle, which of course excites me because I've been buying, quite a bit of a couple of the earlier stage uranium names that I really like and holding them and not touching them, just watching them. Thoughts on where we're at on the cycle there?
Uranium has a lot going for it. We touched on it a little bit last week. I was telling you the Air Force was moving to nuclear. We mentioned Fairbanks, and you talked about Senator Murkowski, I believe it was. And I think I also mentioned how Meta had signed a 20-year power supply agreement with a nuclear utility and was taking requests for proposals to get up to 4 gigawatts over the coming years to power their um, AI data centers and ambitions. None of those narratives are going away. And you cited the Sprott here, which is both a signal and a catalyst, as you explained, because it's a signal in that it shows you that institutional money, smart money, is willing to pony up large chunks, in this case $200 million, to deploy into the physical uranium market. And it's a catalyst because of just that. It's deploying $200 million into the physical uranium market. And if you remember a couple of weeks ago, I was telling you that I had interviewed Rick Roll, and I posed the question to him about the uranium market being sort of a contrarian trade then. This is, before we had these announcements of the past couple of weeks, including, by the way, executive orders from the president that relate to nuclear energy and the uranium. And so and he was saying, Rick Rule was saying that, he expects the contract market to be tight. Maybe he had inside information, Rick being Rick, on this, the Sprott as his former institution.
Yeah.
They were about to do this raise. Maybe not. What do I know? But here it is starting to play out. And so there's a couple of other things that I see. I told you about my neighbor messaging me about the Oklos of the world. And then in the past week, I saw NewScale had another design approved. And then I saw a write-up in the Financial Times, that venerable rag, about one of those companies, Oklo, raising $400 million in a secondary offering over the past couple of weeks. And then TerraPower, which is Bill Gates' investment, which is also working on small-scale reactors, raising money as well. The Financial Times article was about these companies, nuclear energy companies, raising $1 billion to deploy into these technologies to power all the things that I just sort of recapped and that you and I have been talking about for years, right? The data centers, the energy transition, the military, all that sort of stuff, right? I think I hit all the points there that I wanted to hit on. So, except for criticality, you said that uranium has criticality. It's fun. I laugh to myself because I love physicality when I'm watching the sports, where the announcers are always talking about physicality. It doesn't matter if it's basketball or soccer or football. We always need to know about the physicality, and then afterwards we ask the players about the physicality. It was a lot of physicality in that game. How do you respond to that? And the person always says, "Oh, it's tough out there. The other team was battling. We had to step up our game to battle right with them. They're just being physical." It goes that way every single time. I'm going to start doing that for uranium.
Criticality.
Not a criticality out there. We got to step up to the plate. We got to make sure we got enough pounds out there playing offense.
I love it. It isn't it. What a coincidence. And I'm being a smart ass, right? What a coincidence that all of the powers that be that have like the real money and that are trying to win the AI battle with China, right? The Bill Gates of the world, the Zuckerbergs, the Bezos of the world, all these guys are out there putting their dollars hard at work, securing supply for those ambitions. Believe you me, folks, they have a lot more resources than Nick and I do. And believe you me, they understand the criticality of having uranium supply for the next 20 or 30 years. If they're going to be able, I had to play off of it, Nick, it was too easy. If they're going to be able to fund and power, literally power, their AI ambitions. And look, you got the military coming out and saying it's a two-way race and it's going to dictate the future in a lot of ways. And it's us and China. So to pick your battles, right? We got a lot going on in this country that I'm not happy about. Still a lot going on that I am happy about. Some of that deteriorating. We're going to talk about that here in a second. But when it comes to this, pick your sides, and I don't play neutral, right? So on this one, it's go Team USA for sure. Because I sure in the heck don't want to be beholden to China. And however they decide that this industry that's unregulated is going to develop. But we need to win that race. That is an important race to win, in my opinion. That is, you always reference why having the ships and the planes is so important, right? And why we spend the money to have those ships and those tanks and those planes and the intelligence that we have. I think in 10 or 15 years, whoever is at the head of that AI table is going to have a significant advantage strategically for the next several decades and maybe longer.
Um, yeah, what popped into my head, you know how this podcast goes. It's weird sometimes. It's a bizarre world as it was. Yeah, what pops into my head is that the juxtaposition between aircraft carriers and planes and things and needing to be the reserve currency, and at the same time not wanting to get entangled in foreign wars that in a very real way allow us to maintain that hegemony of the US dollar as the reserve currency. And so anyway, I'm sure we'll talk more about Iran in a second, but it's sort of funny how that works, right? You need it but you don't want it.
Yeah. You need it with you need it with a, what's the word, with the scalpel, not with a machete, right? And so
Yeah,
I
it'd be
think that's
surgical. Yeah.
absolutely. Let's talk gold and silver. I promised we would. I don't have a lot on that front. I'm trying
Nope.
to keep today's podcast a bit brief because I know it's a short week for a lot of people, but they both still look good to me, right? With gold right near the $3,400 level, and silver above the 36 and close to the 37 level, and holding, by the way, the 37 level very convincingly all week long thus far. So I'm curious to see how it closes this week, despite it being a short week. But thoughts on where you see both?
I mean, it's the same exact
Yeah.
answer as last week, and in that sense, we were right, or I was right. I was telling you that gold is range bound between 3,200 and 3,400. It's consolidating its recent move, which came pretty fast, and that's a great place to be consolidating. I don't know whether it breaks up or breaks down from the consolidation. The sentiment and all the data tells me that it slightly breaks out higher given the geopolitical tensions, given rates actually cooling, which is flies in the face of the bond vigilante stuff and the 10-year going to 5% that we were talking about a couple of weeks ago. With likely 1 to 2 rate cuts coming in the second half of the
Yeah.
year, and some other downward pressure on bond yields, which I'll talk about in a second, with some bills and some
Mm-hmm.
banking regulations that are working their way through. And I was also telling you last week that silver looked better than gold, and that played
Yeah.
out this week as well, with you
Yep.
saying just now that silver stayed up around 37 while gold went back down below 3,400. So both bullish. Silver has more tailwinds if we're going to not have a recession. And so same exact answer as last week. Both bullish. Silver looks a little bit better.
Beautiful. Copper,
And I'll
ditto.
just do copper. I'll just do
Yeah.
copper
There you
because
go. We think the same.
you're gonna
Yeah.
ask, and it's
I
it's
just
at the
did.
same exact it's at the same exact price it was when you and I were talking last week. So copper's bullish, up around 480, 485. Wants to knock on that $5 door, and then likely go through it. And again, that's a healthy price. I don't have sort of a prognostication or a prediction for you other than it's a hard commodity, which are inflating as I've gone through now today and last week. And if we're not going to get a recession, that's also bullish for copper. And so the names are acting okay as well, the related equities. So copper healthy.
As we decimate Gaza, or help fund the decimation of Gaza, and go back and forth on an almost hourly basis, this administration, on whether or not we're going to attack Iran. I mean, we'll talk about that in a bit. There were some pretty consequential bills that were passed while no one was looking. And I would love you put it on the sheet that we put up like 5 minutes before we get on here, folks. That's how seriously we take this podcast. But no, look, we freestyle most of this because this is all we do is pay attention to this stuff. And I noticed those three things that you put on there, and I know you're going to tie those in together well, but they did that really quietly. It's always interesting to me when they do things quietly. I'd love your thoughts on them because I haven't dug into the guts of those bills.
Yeah, well, you've got the big, beautiful bill that's working its way through the
Yeah.
Senate. It's already been passed by the House. We'll see how much they change it. We've talked a little bit about that. I think last week you were talking about
Yeah.
Thomas Massey and Rand Paul, and how
Yep.
they were basically saying the truth, and that bill was going to add to the deficit. But that's not what I'm talking about here. I'm talking about, it's called the Genius Bill, and that's sort of funny because your president is a
Of course.
genius, and
A stable
was also
genius.
and this is for stable coins, right? So that's what this bill is, the Genius Bill for stable coins, right? It's worth a refresher on what stable coins are. These are coins that are tied to some underlying asset that is stable, right? I.e., T-bills, the dollar. There's some, gold tied coins out there, but the most famous and the longest livid of which is Tether, which you've probably heard of. And interestingly, on Tether, I don't know if you saw, I'm sure you did, because I think some people sent us emails about it, but took a stake
Yeah.
in a royalty company. Just this
Yes.
is sort of off topic, but worth mentioning. Actually, I'm going to talk about it for a
Yeah. No,
second,
talk about it.
and
It's
then
on topic, actually.
I'll get into stable coins because,
Yeah.
we were ragging on Nat Gold a couple of weeks ago
Yeah.
and saying that, monetizing or tokenizing is the better word, gold assets in the ground didn't make one lick of sense because the entire point of the gold industry is getting that gold out of the ground, refining it, and profiting from it in terms of what it costs you to drill, explore for, and develop that asset relative to the profit you make from selling it at the price it is when you get it out of the ground. So some people say that's stupid, like Warren Buffett, you dig it up out of the ground and you just put it back in the ground and in a safe. Well, yeah, that's the entire point of the industry. That asset is now overtaken the euro to become to store your capital worldwide, right? So that is the point of the industry. And you and I were saying that it only made sense to tokenize your gold asset if it wasn't going to come out of the ground anyway. I think we were talking about Northern Dynasty, and I was saying that if you actually are a legitimate explorer, developer, junior gold company, you would never want to tokenize your asset because it just mucks up your entire business model and proposition, right? How are you going to finance off of that if it's tokenized? How are you going to sell a royalty on it if it's tokenized, et cetera, and on down the line? And so
I think my
it
insight,
was.
just to be clear, that was all you with the intellect. My insight was, I don't know how a partner would respond if I just offered tokenized orgasms. Was my insight.
Yeah, right. So you need something
Probably
that's
not
real,
signing up for
and
that, ladies. Like,
it doesn't become real until you finance it and extract it. And so I thought it was interesting that Tether, one of the largest stable coins in the world, was going the other way. They're not tokenizing gold in the ground. They're making an equity investment into a company that gets royalties when the fucking gold comes out of the ground.
imagine that.
Fuck. Anyway, sometimes it's just like, fuck.
Imagine this, y'all. The guys that give the orgasms or the girls that provide the orgasms get the reciprocation from an eager partner to coexist. Imagine a world like that, guys and gals. Fucking A,
Anyway,
man.
so,
Can't make this
all
stuff
right.
up. So back to the genius bill for the
Back
stable
to the
coins.
stable genius.
Stable
So,
genius.
the Senate has passed this bill, the Genius Bill, about stable coins, requiring them, or would require them if it's passed by the House and signed, to hold a certain percentage of their assets in T-bills, i.e., U.S. Treasuries. And
Yep.
what does that do? So it was saying off the bat that, did I take notes here good enough to tell you? Yes, the Senate approved the Genius Act. It was approved 68-30. And under this bill, issuers, that is, issuers of the stable coins, must hold 80% of their reserves in sub 90-day T-bills or repos. And that would equate to about $250 billion worth of buying between Tether, which I mentioned, and Circle, which also recently had an IPO, but I'm not going to talk about that now. And so the context is this: if you create that sort of buying for T-bills, a higher demand and higher buying for U.S. Treasury assets pushes down the yields, right? It pushes
Sure.
down the rate that you get. And so that's one of the goals of the administration, is to get rates lower, because Jerome's doing such a terrible job. He should be cutting rates now, right? So here you're doing it potentially through the crypto market, which I thought was interesting. The other thing that's interesting is this leverage ratio. SLR, it's called, supplementary leverage ratio. And this is going to get complex and above my pay grade, but it's essentially this. Banks have to hold a certain amount of their leveraged assets in quality underlying assets, right? So if you have so much leveraged loans or loans on the books, right now you have to hold 3% of that in capital against
Yeah.
your leverage. And if you're, this again, complex, if you're what's called an SIB or a GSIB, a globally systematically important bank, you need to hold an additional 2%, right? So 5% of your assets need to be held in cash or whatever a tier 1 asset is, cash, bonds, etc. What's interesting is that next week, the 25th, all the banking agencies, the Fed, the FDIC, the OCC, are going to have a meeting, and they're going to try to reduce the amount of safe assets, safe capital that you have to have relative to your leveraged loans. And why that's
Because they make it
interesting,
all up as we go, folks, just
I'm
to be
getting there.
absolutely clear.
I'm
Yep.
getting there. The reason that that's interesting is because the Basel rules, some of you may be familiar at least a little bit with Basel, which started to be discussed and implemented in response to the global financial crisis in 2008 to firm up the banks, which we bailed out with TARP, a troubled asset relief program, and cut rates to the bone with ZERP for an entire decade. I'm sure some of you can remember some of that.
We also made up.
We're still implementing these Basel rules, which an international consortium agreed to, and the final set, it's literally called the Basel Endgame, is supposed to go into effect next month. July 25th, and that's July 1st of 2025. So, and now I'll tie it all together and tell you why it's interesting. First, I was just telling you that the banking agencies are going to meet next week and pare back the amount of safe capital that banks have to hold. Well, Basel is intended to increase the amount of safe capital that banks are required to hold, and so essentially you just have these the Fed and the FDIC working against these Basel standards, and I don't know which one is going to win. We'll see what comes of the meeting next week between the regulatory bodies, and we'll see what happens in July when the Basel, the final implementation was supposed to happen, which was always sort of a soft circle date, and which was always done with a nod and a wink saying like this stuff might change anyway. So anyway, all that is interesting. And the last part of why that is interesting, hopefully I got some of that right, because I'm certainly not an expert on international banking regulations, but it was interesting enough to me to brush up on it before this podcast. Anyway, the last thing why Basel is important and interesting is because there's a thing called Tier-1 capital, assets that banks are allowed to hold against their leveraged plays that count as the safe capital, right? Well, gold, as part of this final Basel endgame, is supposed to become a Tier-1 asset. That means banks could buy gold to hold on their balance sheet,
Yep.
and it would count as safe capital. So a lot of moving parts there, but some of the takeaways are, if I could just distill it down, is, the Senate might require stablecoins to hold T-bills, treasury assets on their balance sheet, which could lower yields. Basel is supposed to increase the percentage of safe assets that banks have to hold, which could lower yields, and also increase gold in a dual way by pushing down yields and by physically buying gold. And at the same time, the banking regulatory bodies, FDIC and the Fed, are meeting in late June to potentially pare back the amount of safe capital. So I thought it was newsworthy enough to get on the sheet there. People can go do some of their own due diligence. But I think that's all I got on those topics. You have anything to add?
No. Well done. Gold's going higher. I don't know anything about stable coins, but they're probably going higher. They're making all this shit up as we go, folks. They're going to continue to make shit up. This is, I'm going to get on the 10-second Fed rant, right? So the Fed's probably out in the next couple of months. Jerome knows that. That's why at today's press conference, which was a snooze fest, he actually threw a shot. He said inflation's ticking back up, and I expect that to continue, in part because of the tariffs. That was very pointed. He's not normally that pointed, and he understands he's about to be replaced. He's going to be replaced with another monkey that'll dance to however much Adderall Donald Trump took on the day that he decides to make his monkey dance. That's the way this entire administration has worked. It's why they flip-flop on everything from day to day, from hour to hour. Whether it's immigration, we're going to halt deporting farm workers and hotel and service industry people, and then Stephen Miller goes in behind the scenes, and then an hour later is, no, we're not. We're going to continue it. It's going to continue. It's a mess. Iran, same thing. We're going to get involved. We're not going to get involved. We know where you're at. We can blow you up, but we're not going to blow you up. nobody knows anything right now, right? It's very, very not stable genius like. Not a political rant, a factual observation, which is why most
For
of
sure.
the right that was prominent the last decade, the Candace Owens, the Marjorie Taylor Greens, the Tucker Carlsons, the Joe Rogans, are now all coming out and saying, what the fuck are we doing? Maybe getting into another war with Iran. So tying all this back to the Fed, the wealth inequality will continue. Those on the lower end will continue to get bombed and or picked up by random people with guns and masks who we don't know what authority they got. We don't know if they've ever served in anything. A lot of them look like they don't even know how to handle a weapon from what I've seen. I'm talking about the ICE agents specifically, right? Just seeing the way that they approach. If you approach me in that fashion with a couple of trucks, well, let me rephrase that. If you approach half of Texas with that approach in here with no identification and a mask and just wielding guns and like screeching tires in the middle of an HEB parking lot, I don't know
Stand
how
your
that ends
ground.
up for absolutely right. It's that kind of environment in Texas, and so look, the wealth inequality that the Fed has enabled has been allowed by the wink and the nod that you referenced earlier, and that's exactly what's happening with these bills. They're saying for the longest of time, we needed this much safety, this much collateral to ensure that you are not a threat to the overall system. But once those banks of global importance can no longer meet those standards, an alarm doesn't go off. They just get together and like pet each other and decide to change how much collateral you're allowed or required to have in order to still exist as an organization. It's how we got in trouble back in 2008. It's how we got in trouble in 87. It's how we've gotten in trouble historically. And it's how we're going to end up in trouble again. I don't know when, no crystal ball on that one. But I know when you start getting this wishy-washy with the rules, and we're talking about global banks of importance as they're described legally, and you're talking about removing, in one case, removing the amount of collateral you need, and in the other, increasing the type of collateral but that's acceptable, because both things are happening at the same time. It's the Fed and like the world banks and everybody just playing favorites and deciding who gets to win. It's always going to be the asset owners, folks. So stay tuned for the premium portion of this podcast. We can tell you what stocks we're looking at right now. So that no matter what happens when they meet and wink and nod and pet each other, or no matter who the Fed is, hopefully you can make some money during this cycle that will continue to be volatile in an increasingly volatile world. Anything to add to that,
Exactly.
Nick?
No, that was perfect.
Excellent. Listen, let's I hope everyone has a beautiful week. Let's get to the premium portion of the podcast. I am Gerardo Del Real along with Mr. Nick Hodge. This was the 322nd episode of our weekly therapy session that we call Investing in Bizarro World. That was a fun one. Have a great weekend, everyone. More love, more kindness. It ain't that serious, and if it is, take care of it. But be intelligent about it, man. Just be surgical about it, right? Take care. Have a great week, everyone. We'll see you next week.
See ya.